Good afternoon and welcome back to this week's review in markets. It's very much a UK focus this week. Things might not be hotting up on the football pitch for the home nations, but things are certainly getting interesting in the UK and the economic data. I'm joined by Paul Durrans from our investment team here at True Potential Investments. The focus, first of all, Paul, is the inflation data we had for the month of May. Could you give us your read on that, please?
Yeah, whilst we don't have great news on the football front yet, we do on the UK inflation front. So inflation now back at target at 2%. We rewind to October 2022, we had inflation at 11%. So we've come a long way down to 2%, which is great. When we look at the details, we look at core inflation. So this is inflation. We take away volatile components of energy and food. Core inflation is still somewhat lagging headline inflation. It has fallen over the month from 3.9% year on year to 3.5%, but still some way to go. And particularly when we look at the services components, so we look at services and goods, services still sticky.
And that's what's really important, is it's the services inflation strength. So services is driving our UK economy. It's what's giving us this modest uplift in GDP growth. And it's it's between 5 and 6, isn't it? And ideally, the Bank of England would like to see it trend possibly somewhere towards 3, perhaps, before they get confidence in interest rate cuts.
Exactly, and the latest reading came in at 5.7%, which was 0.5% higher than the Bank of England's forecast at the end of May. So still somewhat problematic and still further to go on that.
But the trend is there, so it is falling. It's just that services inflation typically does lag the cycle. It's not unusual to see this type of services strength when we compare it with the Eurozone and the US, for example. So that's a neat segue then into how the Bank of England were thinking about things yesterday. What's your read on the decision, which of course was no change in base rate?
Yeah, it was, I suppose, slightly unusual, no press conference this time around, given that you've got the general election coming up in just over 2 weeks' time. But it was slightly more encouraging on the front of the potential for interest rate cuts at the margin. When we look at the minutes, there was no change in interest rate or the base rate at 5.25%. There was no change in the votes. So there's 9 members at the Bank of England that vote on interest rates. The vote was for 7 to 2 in favour of no change of interest rates. So when we look at the details, look at the minutes, it was somewhat encouraging that despite services inflation being slightly stickier, stronger than they initially thought, they were somewhat happy to not draw any conclusions yet on it and still believing in that inflation will continue to gradually trend lower, or services inflation trend lower. And the current reading on inflation, or the stickiness that they're seeing, is perhaps due to the changes in the minimum wages. So minimum wage increased 10% in April, and so that's having some effect on prices. And so on the whole, pretty encouraging from a market perspective. No significant change in gilt yields or the pound. A slight increase in the probability of a rate cut coming in August.
Yeah, and that's what I think we're teeing up for, is possibly a rate cut in August. And to give an idea of the difficulty the Bank of England have had in this cycle, if we go back 12 months, the expected inflation in this quarter to be 3.5%. It's likely to be around 2 if you take into account where inflation may go to this month. If we go back a little bit further than May last year, they thought inflation this time around would be 1%. So they've gone 1%, 3.5% when it's actually close to 2. So forecasting does have its limits. I guess the bank will know this. They'll probably have another revision set coming through in August. The cut, it's about 50-50 priced in the market right now. Is that right, Paul? So,
exactly.
But it does seem that if we look at the move in bond yields in particular this week, the gilt market, so our own domestic bond market, has been interesting. It certainly seems to be going that way of rate cuts. So what we really need to behave is services inflation over the next month or two. We need to see a trend down there. I guess then the one thing that's driving the inflation strength, the difficulty for the Bank of England, is the consumer, because of the strength we've got in services inflation, which takes us neatly into this morning's retail sales. A surprising print, What's your colour on that?
Yeah, I think what we've, if we look at the retail sales data, it was stronger than expected, coming in at 2.9% for May, which I suppose, given how bad the weather is, it is surprising that the strength of consumer has come through. But I suppose what's been interesting, if we look on a 3-month or 6-month time period, is that consumer confidence has been building, and you've also seen stronger real wage growth. So you've had higher wages, but with inflation coming down as well, you've had real wage growth. So we've kind of been looking out for, well, is that going to translate into stronger consumption? Just taking this retail sales report, it suggests so that it's tentatively increasing, which is a positive really for the UK
and
growth.
I suppose the emphasis there is tentative, because if we adjust retail sales for just the volume of goods that consumers are buying, it actually hasn't increased at all since COVID. So although we're being forced to spend more on goods and services because of the inflation impulse, we actually have no desire as an average consumer to buy more. So that's what's possibly limiting the growth impact as well. So I guess, we've focused a lot on the UK here. We should mention the US retail sales, which came out earlier in the week, just to try and, marry it off with the UK. Is there any interesting dislocations between the UK and the US?
I think what's quite interesting is, looking at the retail sales this week, is that it appears that the US consumer is slowing. And we've had, since post-COVID really, that just the US consumers just continue to spend on goods and then onto services. That appears to be slowing at the margin. And this is something that we've been talking about as a team coming out of the earnings transcripts, Q1 earnings transcripts, that companies were noting that the consumer was starting to slow. And that's actually coming through in the hard data now.
Yeah, and that's perfectly normal, really. If we think about the tailwinds from COVID, they should be fading right now quite quickly. A rapid normalisation in the US, this idea that US growth might catch down to the rest of the world as those COVID tailwinds fade. So nothing really to worry about, is there? It's just that things are more normal.
I think that's the right word. Normalisation is coming through consumer spending, in the health of the labour markets. We're seeing normalisation, savings rates. So getting back to a normal or equilibrium.
That's great. Thanks, Paul. So in summary, the UK looks likely that it might be able to have a rate cut sometime in the late summer. Inflation is going in the right direction. The Bank of England are just waiting for a few more confirmatory signals there. And we have a more normal global economy realising as these COVID tailwinds fade. That's all for today, but please join me on Monday for our look ahead to the week, where the main focus will be some US inflation data just towards the end of the month. Thank you.